All righty. And so no broadcast yesterday. I got caught up in some stuff. But, yeah, really weird day in the market yesterday. We were up early morning, almost 70 handles. And then we quickly turned around and things got dicey real fast. And we ended up closing, go to the 1 hour, we ended up closing up on the day. But then they took it down pretty hard into the close. I think we ended up only up about 30 handles. We're up 9 overnight. Markets look pretty flat. And I think the story of the day is most likely the fact that bonds just continue to just get hammered. I mean, absolutely, utterly hammered. So the game plan today for me, and if I was actually showing my screen, I don't know why I have crypto up there, but because I'm an idiot. The game plan for today is going to be one of caution, and we're probably going to be playing a couple of these pivots. I really like R2 up here. I really like this spot. And there's actually a couple spots. You can also see there's a long-standing point of control and a lot of selling up here. Also like this area as well. And this is about 60.98, almost near 7K. Now, that's going to be a big, not 7K, but almost near 61 honey. That is going to be a big move if we get there, right, today. I mean, from 29 to 98. We couldn't do it yesterday. Yesterday's swing high on this candle was... which will be a good spot to mark 60, 68, 25. 60, 68, 25 right there. So we're going to go ahead and add an alert. And then the reason why I didn't broadcast yesterday either was because my subscription to TradingView, which now I didn't realize it renewed on January 6th every year. I never had it set up to auto pay. So I don't like auto pay. I usually turn it off because I don't like shit billing my account. I don't care what it is. I'm just I'm kind of a old fuddy-duddy when it comes to that. I don't want anybody coming in and taking money that, like, because I forget. And I know if I have to pay it, I pay it. But anyway, I didn't have an auto pay, and the price didn't go up from last year, which was nice. But still, I still question, look, TradingView, and I know they're probably never going to see this, but look, it's a great platform. I'm not going to question it. It really is nice. But the fact that, they make all this money with these affiliate programs from all these brokers, and you have to go and charge consumers what you charge it's douche. Let's face it. Let's I'm not going to argue with it. It's kind of douche. The fact that, like, I could see you needing a subscription if you don't have a broker or there's a broker that's not on the list. And I could see the subscription being like 10 or like $10 or $15, but it was $300. It's $25 a month. It's like I might as well be part of some jerk off's Discord. I don't know. I paid it last year, and I don't really remember why, because I buy the plus because I don't want to see ads popping up on my screen while I'm trading all day, because that's what happens. That's what started happening. I started getting ads popping up one after another, and I'm like, what the frig is going on here? Then I looked, I'm like, oh, my subscription ran out. So anyway, I don't know. There's my little bitch session for today for that. But I think it's kind of, dude, look, I'm all about people making money and making a profit off something. But what they're charging, I think, for consumers is just, it's absurd, dude. The platform's not that good. I mean, I paid for it, and I'm going to suck it up this year. And I paid for it because now I can connect my brokerage accounts that I have to it. So I'm kind of excited about that. And it's also nice, since I can connect my brokerage firms, I don't need to pay for their data feeds, because I'll get the data feeds from my brokerage firms instead. So anyway, that's that. This is the high of the day on 01/06 2024. I always like to mark that in there. So that alert is set on the ES. I kind of like that short there. There's a couple of spots up here that I think you can fade today. And that is one of them. Obviously, R2, 60, 77, 25. And then this one's, I think, pretty far-fetched. I don't know. Anything can happen. But 60, 98, 50. Now, I don't know if we even get there. I don't know if there's enough mojo in the market to get there. There seems to be a lot of pressure. I'm looking up and down the tape here, and there's a lot of the bigger names outside of NVIDIA are all kind of hitting the skids a little bit today. So I don't know if there's going to be any mojo in there, again, in the major markets to get this thing moving. They haven't been able to do it the last couple of days here. I also like S2 down here, which is 59.69. Again, big range here. So I mean that's actually a big, that would put us down, 50, 60 handles. I don't know if we do or not, but I'm going to add an alert for that. There's an alert for that. There's an app for that. Right. Right. So we're going to add that alert. It's 57.71. And you might ask what I'm doing with the JSON that I'm adding here. Discord, which I'm in the process of starting up the Discord again, but I haven't opened it yet. S2. And it's S2 from today. 5. I put 24 in the other one because I'm a moron. I'm going to have to, it's going to take me a couple of weeks to get used to that. So that's kind of what's going there on the ES. Also, S3 looks very interesting. Again, I'm just looking at the chart here. Had a lot of consolidation, rally. We did breach it, but, again, that one may actually be. But if we get down there, we get down to 59.37. It doesn't look like there's a hell of a lot underneath there. That could be a breaker in the market. And then more interestingly is we have this, I'm going to paint it here. We have this double bottom here, short term, down here, which are going to run you 58.81 to about 58.65. Just an interesting spot to watch, because if I do this, if I start backing out, you will see that this runs all the way back. All right, so interesting. And we've built this base here, and this is a pretty critical area in the market. So you may want to mark this area, that if we do break it, and then the reason it's, to me, the reason it's so critical is I don't have my screen brush on, so I can't use my fancy arrows. But the reason is because I can't get this stupid thing to work. There it is. If you look on the profile, on the volume profile, there's a bit of a hole here. And you see this hole runs all the way down to about 57.50. And then you look back on the tape, and this is prior to that November election like breakout where we just had this blow off. And that would bring us back to levels prior to the election. So again, I'm just pointing these things out. I don't know. You know, I only put maybe about 20 or 25% weight on technical analysis actually panning out. But the nice thing about technical analysis is it looks really cool when you start painting shit on your chart. And then you start breaking those areas and you're like, wow, you know, I put that on my chart. You didn't do anything about it, right? You didn't go short today and hang on to it until then, because most people aren't. And the reason the market, I don't think, is tanking right now overall and getting any real snapbacks is, I don't think there's a lot of people short right now. And I think if there wasn't a lot of people short, then the market would tank. So it sounds crazy, but that's kind of where my mind's at. I think if there were more people short, or excuse me, less, I think if there was more people short, the market would rally a lot harder. And I think the reason is because a lot of people aren't short. And I've been doing this long as I have, you kind of figure out that logic. And so anyway, that's kind of what's going on, and that's my little take on how things roll. And we're stuck, you know, for the most part. We're stuck, and I expect us to be stuck in this range for quite some time. Going to move this here, right? We're stuck. Right, and you know, and so be it. So I guess with that being said, and again, this is the ES. That's what I look at. I know a lot of people that trade NASDAQ. It looks a lot different. The NASDAQ looks a lot different, but I mean, overall, although it does look a bit different because it's probably more skewed to the upside. You can see over the same time frame that it has actually trended up, where the ES really has just chopped. You know, we got that breakout and we've basically chopped. But for the most part, the NASDAQ looks very similar in that I don't expect us, but I think if anything, the NASDAQ looks more apt to explode than the ES does. That's just my opinion. And from what I see on the charts, this is actually a lot more, you know, and if you were to look at this, this is kind of what I would classify as a longer term, at least since November, a longer term kind of ascending triangle. And then usually what happens with these, right, they consolidate all the way up, and then you get this blow off top, or you get the blowout bottom, one way or the other. But anyway, that's kind of what's going on. I don't really follow the NASDAQ, though, be honest. Like, as an index, I just don't, because I don't trade it. It's a little too, it's too much on crack for me. It just moves too fast, and I'm too old for that crap. I just can't stomach it. So anyway, that's kind of my take on the market as a whole. Let's go back to ES and something I'm comfortable with, right? And you can see the difference, right, over the same time frame. We have just chopped. And it's been a chop house ever since we got that breakout. There's literally 2 spots in the market, and then since then it's just been, let's just cut them to pieces. And it's been two-sided action. Let's cut them to pieces. I kind of say that lightly, but it's been two-sided action, and if you're a trader, you're loving it. You're loving life. And so my kind of take on this is, how am I going to play this? Well, I've been kind of going through a few different scenarios. And we'll pop in over to Tasty Trade. And we will look at some... Now, there's a couple different ways to slice it. You could use the MES, because the MES... Not the MES. You can use the ES, and you can use futures options if you want to. Right? You could. And do it through futures options. And if you notice here, what I usually do is I only use the regular. I only use the regular expirations. I don't do all because there's just too many. And honestly, I'm not doing weeklies, and I'm not going to pick a date on the calendar where, if I'm going to trade at maybe an event of some sort, then I'll do like maybe a 0 day. And I know there's so much. So folks, here's just another thing too. Look, there's so much publicity right now and marketing on 0 day options. And look, I'm not dissing the strategy. I think it's actually really a powerful one. If you're comfortable with it. Right? I mean, if you're comfortable with it and you're comfortable with the leverage that's needed to do it, it's proven to be a pretty successful strategy over time. Just be careful, though, because just like with any option strategy or any strategy, you got to be willing to take that loss. And some of the losses on some of these are pretty stiff. They are pretty stiff, so just be aware of that. That's all. So I mean, just point that out because look, everything looks great on the internet, right? The chick who's 50 years old, who looks like she's 20. Well, look, I guarantee she's using more filters on that video than you ever knew existed on the planet Earth to make her look like that. Not to say that there's women in their 50s or men in their 50s that look good. Yeah, of course there is. But they don't look that good. And, everything on the internet looks better. And so everybody wants to spin that like, oh, this is great, blah, 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 right? And then always read the fine print because I guarantee at the end of it, the person's going to try and send you through some type of funnel or some type of bullshit for you to subscribe to something. Let's face it. That's what the ultimate goal is, and that's why they're on. And look, I don't do that to people. You know that here. I've had this YouTube, which I didn't realize since like 2012 or 2013, and I've always given stuff away for free because I just enjoy this, and I don't care, right? I don't make money. I don't make any money off a funnel scheme or anything like that. I make my own money the old-fashioned way. I have a real job that I go to every day, and then I do this as supplemental income. That's what I do. And I don't need a funnel to support myself. And so anyway, just be aware of those and just be careful about these 0 day things. So anyway, you could do it through options in the ES. The problem is that it's going to be really hard to like sell stuff that's neutral or do a neutral trade in here because the IV rank in the ES is terrible. It's even bad in the SPY, right? It's exactly the same because the SPY is. And so I'm having a hard time kind of figuring out what it is to do because if we get a volatility spike, anything I do or anything I have in mind is going to get just absolutely hammered. So I've been forced to sit on the sidelines. So I guess where I'm getting at is I'm trying to take this chart, which is what we're looking at here, which looks like we're in for most likely another 3 months of just this chop up and down. And so how do I take advantage of it from an options point of view? Well, one of two ways. And what I had in mind was something that's a little unconventional. I don't know if it's unconventional, but it's not really unconventional. But some kind of combination put call calendar spread where I'm kind of on both sides, because I don't know where this is going to go. I don't know if we're going to break out to new highs. I don't know if we're going to collapse. I mean, I'd have to say after the last 2 years of where the market's gone, something's going to happen. But every time I think that and I get that wrapped around my mind, I'm proven wrong and things go higher and, we continue to go higher. And then, the world never does end, right? It never does. Because if I came in here and let's just say I did a strangle, the margins, first of all, are going to be just out freaking outrageous, right? They're going to be absolutely and totally outrageous. And I'm looking for the one standard deviation. Where the heck is it? And there's no premiums to be had at all. In fact, there's put skew is from what it looks like to me. There's some serious put skew here. Here's the, let's see, 595. Here's the 595. No, there's call skew. There's call skew. I just wasn't looking at it right. So there is definitely some serious, I mean, look, these are the puts. This is the calls. It's some serious call skew. I don't know what to do is really what it is. I really don't know what to do. I thought about possibly doing like a little, put calendar, right? And a put calendar, I'd want to do something at or near the money. So I would probably do the 595 here in March and then sell the February 595. I have to do these for a credit. There's really not much else I can do. I have to do them for a credit. And then this is what this looks like. This does not, right? And this is kind of where you're at. And then you're stuck with this thing. And again, this is what the play is. I'm looking for this thing to not do much. I'm not looking for it to break above 630. And I'm looking for it not really to break down under 570 and change like another. And you can see I'm delta neutral. And that's really the only way I can really see playing this strategically, again, and not getting my face ripped off on this, and without being like overly bullish. Because let's face it, it's really hard to be overly bullish as these markets just continue to, every time you doubt them, they kind of rip to new highs. So anyway, there's a trade for you. Long story short, all that fucking bullshit to come up with this fucking trade. Gotta love it, man. I'm sounding like a bloviating idiot more and more every day. But that's really that was the moral of the story. All this chart painting and all this bullshit that I just went through to come up with this. But anyway, that's kind of how you have to do it, folks. Right? There is a little bit of mental masturbation involved with a lot of this, and that's kind of that I just put on display mine. So there it is. And so that's what I've come up with is like something like this. And so I'm going to start adding a little, and again, this is not even really it's nor a bullish or bearish trade. By no means is it either, but I'm going to start adding more trades like this. These put calendars, even a put diagonal, which would make a put diagonal is you would just move the strike and do like a 590, right? So you would just make it a spread, right? So it would be like a 595, 590, and you can see that skews the curve down toward 530 more. you're going to pay a bigger debit, but it does skew the curve a bit. And so you could either do one or the other, the pure calendar or the diagonal. Either one, I mean, you can see the diagonal gives you a little bit more delta, right? Gives you a little bit more negative delta. And to me, that's that's like the second trade, right? The first trade would be to put the pure calendar on. Second trade would be to go with the delta negative trade, give you some negative delta to kind of play this. Because, I mean, at some point, right, we are going to get a little bit of a whooping. I'm not going to load the boat. I'm not, by no means, definitely not going to load the boat. But there you go. There's kind of a trade in the SPY that I've been looking at. And if there's an index, and I've been saying it for a while, if there's an index that I'm at least trying to be bullish in, it's the Russell. But every time I do, the Russell just seems to want to change my mind. Russell looks bad. The Russell is almost as bad as bonds right now. It just doesn't seem like it wants to get out of its own way. When I think it's got life to it, and I'm like, all right, here it goes. It's going to go. And then guess what? It just goes nowhere. And I think it's the same scenario, right? It's very similar to the ES. You have really no spot to go here. You have this base that's built in, and we can't break out above 2450 or so, 2470. And then you have these pre-election lows, which is down near 2065. So very similar, but I'm a little more bullish on IWM only because it has not performed as well as the others. And you can see I am in a few positions in here. And the way to play this one is the exact opposite, I think, of what you're doing in the ES, is you're going to do call calendars at or around the money. So in this case, you would do the 225 calendar spread. And that's what that one looks like. And again, you can see this one is completely skewed bullish. I mean, it's got really no positive delta, but more so than the put calendar. And that's because inherently in all these markets, there's always call skew. Like very rarely is there really put skew, unless it's like some stock like, let me just name an example of a stock with put skew would be Walgreens, right? They've been beating the snot out of that thing till Kingdom Come, and so that has put skew only because it's a piece of shit. But for the most part, most of the indices and your bigger stocks, they're all going to have a call skew. And that's why you're not really seeing that protection to the downside. And then same thing here. If you're going to want to do a calendar or the diagonal, you would just bring this up to a 230. Again, you're going to pay more in debit, but you have a higher reward for that extra capital that you have allocated. And so anyway, that's kind of my take on those markets, which are the bigger markets, which are equities. I'm going to look at natural gas. Natural gas, after we got out of our our trade there where we sold volatility, we played it pretty nicely. We did that iron condor in the natural gas contracts. I have not really, and I know it's actually even made the news. I think it even made the news yesterday morning, natural gas. I just don't see this as being as hot of a trade because they've pretty much deflated it a bit from a volatility perspective. And I don't see the trade here. I just don't. And I'm trying to. I'm trying to find the trade, but I'm unable to. I really am. I like that. I want to keep that. But I can't find it. I mean, we have a market that is trending up, and I could literally probably even make this. I could even go as far as doing this. If I really want to get wonky here, I could do this, right? And then use these areas as your areas for, but it is trending up. I mean, there's no question about it, especially since November. You come out, oh, wow, it can even go further than that. But overall, it's been trending up, which makes sense, right? It's cold. It's the winter. Tis the season, right? You can even go, right? I mean, and we are riding in the channel, as they say. We's riding in the channel. We riding in the channel. I mean, it's not perfect. It never is. But we is riding in the channel. And, you know, what do you do about that? I don't know. I don't know. It seems untradeable to me. And it really does. And it's because, like, you're not going to just go long natural gas and hang in there. And how much more room does it have to go? And so let's look at Natty Gas. They pretty much sucked a lot of the volatility out of it. Remember, if you remember, when we sold our options, they were up. You know, natural gas was near 100 in an IV rank, where now, you know, sitting at 66. All right, it's still elevated, but the likelihood of this going from 60 back down to 50 or 60 going back up to, I think there's actually a bigger propensity for this to actually increase in volatility. And what I don't want to do is get into a trade that's volatility based and then kind of get stuck in a volatility expansion in here. And then what? Right? Because then if I get stuck in a volatility expansion, my options are not going to erode away because I'm looking to sell, right? And then since volatility is not, or if I expect volatility, I can't really do a like Iron Condor or something like that where I'm selling premium. I have to buy premium, and I don't want to buy premium, especially in natural gas. And usually if I have to buy premium, chances are I have to be directional, and I don't want to be directional in natural gas because I'm not sure how much more legs this has. And so the moral of the story is I don't know what to do. Like I know there's a trade here to be had. I just don't think it's yet. And then if we look at this piece of shit, I can't stand this product. How is this thing even like still around? How is it still a freaking thing? UNG. It is garbage. It is such garbage. Oh my God, it's garbage. But the nice thing about it is the UNG, and there's no March. Why is there no March options in here? What's that all about? That's odd. And the problem with the UNG is there's nothing. What do I do in here? What do I do? Again, I can't do anything from an options perspective unless I buy some. I mean, I could sell, but what am I getting? I'm not getting dreck. I ain't getting nothing. I'm getting 29 cents. I mean, here's the one standard deviation. It's awful. I don't know. Anyway, so that's kind of natural gas. I just did want to poke my head in on it. Although the trend is up, unless you're just going to go long, I don't know. I don't think there's any trade there. You know, and then I'm going to go into bonds. Bonds just look, oh my God. This is just, I mean, this goes to show you, bonds have just gone to show me over again, and again, that no matter how long you do this and no matter how much you think you know, you don't know grap. Nobody knows nothing. And here it is. And I played this and I didn't go crazy, but I did add on to my bond position, you know, because I kind of looked at this, I think like a lot of people, and said, hey, look, the bottom's in bonds. Here it is. And no, it's not. Here it is. We literally busted through it. And busted through it yesterday quite a few times and then even made new lows. It went down to 112.70. We have since bounced, but this just doesn't look good. It does not look good. And I don't know. Your guess is as good as mine. If you've been short, God bless you. Good for you. You nailed it, and put the plaque on your wall and put the certificate on your fridge because you are a hero. You did it. But I did not. So anyway, that's kind of the major markets. I don't want to really get into anything else. Talk about a few stocks here. Pre-market and yesterday. Big winners yesterday was Micron, NVIDIA. Semiconductors overall had a pretty decent day other than Intel. Shocker, Intel's a piece of crap. And there's some carryover to that today. In AMD's actually at 130. NVIDIA had some conference or some business last night. Whatever his name was, spoke. Now he's like the old Steve Jobs when he says something, everybody, woo, yeah, and wow. Anyway, look, I'm happy. I have NVIDIA stock, so I don't care, right? I have it in the 80s. So I could give a crap. Yeah, let it go. Big deal. But look, reality is it's a bubble waiting to explode at some point. But not today, right? Pre-market 152. Looks like it may. It's going to be close. It's going to be close. I think it's going to make new highs today, and that's what it looks like. So AMD, Micron, but Intel is still a piece of crap. And so those were the big winners yesterday. And it was all pretty much, and it was even Taiwan Semiconductor. But unfortunately, if you look at these, like MU, IV rank at 23, can't really do much there. There's not, going to have to wait till earnings. And I don't know when they have earnings. It's not even up on the board. Here's NVIDIA, another one, 23 IV rank, horrible. Earnings in February. And we're already in a trade in AMD. Just from a pure valuation point of view, here in February, we're short some puts there, and those are actually working out pretty nicely. But thing with all three of these, if you're going to play one in the semi space, the 1-2 trade is AMD, and it's because this. You have a 60 IV rank, which, look on the chart here. It's still elevated. It's not where it was when we originally sold our premium, but it is still elevated up here in the 60s, mid 60, actually at 60. And that's really the only one that I see that's playable here. And, you really, what are you going to do in here? You have a lot of flexibility. I mean, if you have any cojones, there's definitely some. Here's the 130s, right? There's some decent call skew. These 155, 160s, you can sell some calls up here if you have a little bit of, and try and play some of this volatility. I'm already short a 120. I think a 125. I think I'm short a 125, 120 put spread that is coming in really nicely. So what I might do as an alternate to that is kind of build an iron condor out of that and sell either a 155 or 160. I kind of like the 160, honestly, better. Sell like a 160, 165 call spread against that. Bring in my 50, 62. Those are going to be actually more today because it's up. Right, you might be able to get like 75 cents for that. But that would be a complement trade to what I already have on. Right, so there's one, and you could do the full-blown iron condor and really do the true one standard deviation iron condor, and I think that's actually a pretty good spot to be as well. You're going to get a $1.21. Nice trade. This is a nice trade, in my opinion. And you could still do this one. I don't know why this is skewed. I think this is skewed like this because it has my trades that I have in there already. But that is kind of how that one looks. And that is a pretty healthy trade there. Delta neutral. Why am I out in March? I don't want to be out in March. I want to be in February. So, yeah. It doesn't look as good in February. Okay. No, I thought it would get at least $1 for that, but you're not. No. Nope. Anyway, the March didn't look bad. I kind of didn't know I was in March, but I'm in March. March isn't bad either. You get $1.21. I think $100 is kind of a good floor in AMD. If you look at the chart, $100 is a good floor. I have 115 marked here, and 160 brings us to, the October highs, which I think is a good ceiling there. And then the expected move in March is $20. So that's in the wheelhouse. So there you go. That's actually a nice little trade. I may actually add that one on. I don't have anything in March. I may actually add that one on today. I kind of like that one. So that's the AMD 100, 155, 160 Iron Condor. I think the margins are good too in AMD as well, that you could do a strangle. Let me see what the strangle is. Let's see what the 100, 160 strangle does. And I have to change it because I'm using my IRA. Margins are not bad in here at all, folks. I mean, so $1,300. I'm going to bring 477 in. I got a 77% probability of profit. That's a nice looking trade right there. So you could do the strangle if you have the buying power in here. If you have the buying power, you can do the strangle. It's only $1,300, and to bring in 477, you probably get this for four. I'd probably make this even a little bit more interesting, and I would actually do the 105, 160. Surprisingly heavily delta negative at 878, which is kind of weird, but I like how this one sets up a lot better than the 100. I like this one much better. And you're bringing in, and I would try and squeeze 550 out of this. See if you can get 550. So there's a nice little trade, I think, in AMD, right? Selling a little volatility, giving yourself some time. That's a nice theta. That is a really nice theta for, a March option contract. Seeing you got, 73 days? And again, as I mentioned, the margin is not nuts in here. Margins are good. So I kind of like that one. And let me see open interest. I think there's definitely some open interest down there at 105. I'd have to say, yeah, 5,000. So you're in a pretty liquid contract. And the nice thing about AMD as well, these markets will tighten on the open. They generally have good markets. I mean, they're showing a 10-cent spread here pre-market, but they'll tighten up. And the markets are generally really good in AMD. And I believe it does get a very good, it gets a 4-star liquidity rating, which is good. And there's my position right there. I'm in the Febs. So I don't have anything in March. I actually probably put this on. I like the strangle. But again, if you don't have the You don't have you don't have the buying power, right? Just cover it. Just cover it. Just buy the wings, right? And you still got yourself a nice trade, 66% probability of profit. You probably put this one on for, I do $1.35. I always squeeze every penny I can. Decent theta number, delta almost neutral there. You're only using about 370 in buying power. Nice little trade for you. All right, so that's the one to play. And then the other one I was looking at, and these are in the semiconductor space. The other one I was looking at, and I still have it up here, is Intel. And I almost did it yesterday, and I'm glad I didn't. But the only thing you can really do here in Intel, again, and in my opinion, is you really can't sell anything because you're not going to get it. You're not going to get any. You could sell an in-the-money put in Intel if you want. But I think the trade to have, or the trade to do in Intel, if you think it's got any movement whatsoever, is to do a covered call. Right? Buy the stock here at 19 and change. It's at 19.92. Sell the 20. Do it in March. Sell the 20. You can get $2 for it. It basically gives you, basically guarantees you $200 in this trade. And if it goes from 19 to 23 or 24, suck it up. Don't be a pansy and be like, well, that's just how it goes, man. Let it get called away and have a nice day. And don't be a pansy. You locked in $200. And then if it goes against you a little bit and it goes down, right, and you get some downside, you start rolling that call down. Right? And buying yourself some time for a bounce. And that's really the only play that I see in Intel. And again, the nice thing about it is that the margins are really good in here. And then if you do the covered call, you're getting about 45 deltas, right? So it's like buying 45 shares. It's like you're buying 45 shares of stock. Right? You get a little theta in here because you're short the option. And then if you boiled it down, $200 on $795, you do the math, that is a pretty damn good return on $700. So that's one I like as well, Intel covered call. All right, so that's in the semi space. I guess big tech, because outside of that, you're not doing much in any of these others. We'll talk about Tesla. Tesla's still bid from a volatility point of view, but Apple is not. And Netflix, we already have a trade on. I want to talk about that. So let's look at Apple real quick. No real volatility here in Apple at all. 39.1. It's not there yet. Gets over. Apple's one of these stocks too that doesn't usually run hot on volatility, but when it's elevated, it does get in the. You see here, it does get in the 70s and 80s, and we're just not there yet. So there's no there. Tesla still remains volatile, and I have a lot of stuff painted up here on Tesla, and I'm trying to put on. I was trying to put on yesterday in Iron Condor, and I don't know. I think it's still. Is it? No, it's gone. It didn't get canceled. But I do like an Iron Condor in. Do I have an Iron Condor in Tesla? Let me see. I didn't know. Let me see. I know I have a bunch of stuff. I do have an Iron Condor. I have the 300, 295, 500, 505. All right, so there it is. I do have one. So it's the 300, it's the 305, 300 in February, and I have the 500, 505. That is what I have on, and I like it. I did put it on yesterday. So, and this will be the last of the trade. So this is what I put on yesterday. And the reason is like, I'm not bullish or bearish. Like, I own a ton of, like, I own a decent amount of Tesla stock. I've had it for a long time. I can't sell, let's put it this way. I got an irregular account. And so I can't, people say, oh, you can't, I can't sell it because I don't want to sell it and I don't want to give my money to the government. So what I try and do is when I do sell my Tesla stock, I need to have a comparable loss in my account so that I can, swap them out, right? I take a capital gain, I take a capital loss. It's a wash. I'm happy that way, and I don't have to pay taxes because I don't like paying taxes. I don't care. I don't like paying taxes. I don't give a shit. Yeah, roads, I don't like tax. I don't pay taxes. You know what? You want to charge me taxes and then you want to charge me to drive the road? I'm all for it. Put tolls up on everything. Put tolls up on my road out in front of my house. And then this way, when I use it, I pay the toll. I have a problem with it. But don't pay me. Don't say, oh, we're going to take tax. Because you know what? At least I know that I pay the money for the taxes. I pay for money for the toll. The money is going to the toll. When I pay tax, I don't know where the money goes. So anyway, there's my rant for the day. But that's a nice little trade there for you in Tesla. Would be the 305, 300, the 500, 505. And I think you're in the wheelhouse because the expected move is $74 in February. And we're in pretty much $100 spread. So we got a buffer on each side. And it's as close to as a one standard deviation as you get. It's a little skewed on the call side, right? Because it's not quite, it's little inside the standard deviation, but that's kind of the trade in Tesla that I like here. And the reason is this right here. And you're not doing anything uncovered, is the IV rank. And you're not doing anything uncovered in Tesla because the margins suck. All right, and so that is the broadcast. And so have a good trading day. Good luck. Markets do look like they are doing nothing still. So nothing's really moving.